Hello friends, welcome to the Weekend Investing Daily Bite of 26th of November. And after the two good sessions on Friday and Monday, yesterday and today remained largely flat. So the market is digesting the roughly 900 point gain that we got on those two sessions, and it is still digesting that. Um, we'll in our video series today, we'll look at a sector which was the worst sector just 6 months back, and now it is the best sector today. So this is how sectoral play happens, going from best to worst and worst to best, and how to play that. We will discuss this in the second half of this video. Please read the disclaimer. Please subscribe to the channel and click on the bell notification. So 2 days of consolidation after a jump. The gap has not filled. The market has yet not given any indication that it wants to come down. The 2-day low is yet to be broken. So far, it looks all right. Depending upon other cues, market may consolidate here for some more time, maybe fill the gap and then go up, or just top out here and play dead post that. We'll come to know in the next few weeks. I think the cues from budget are still far away, so that buildup will start happening towards January, and towards the end of December, possibly there will be some murmurs about FII allocation towards India, etc. But between now and end of December, I don't think there are any very big cues other than Trump coming into the office, announcing tariffs like he has on Mexico, on Canada, on China. I don't know what happens to tariffs on India, but that is probably the reason why most markets or currencies will shake in the next 30 odd days. So far, so good. Nifty Junior also very, very flat within the previous day's range, 0.26%, no harm done. You go to mid caps, again, absolutely flat, 0.05%. Uh, and small caps actually gained 0.61%. So as I've been mentioning last couple of days, small cap chart is the first one of the block, and is looking good. Um, Small caps are just about less than 7 or 8% from previous highs. So maybe we are getting this upswing and then we may get a downswing again. But it is good that the market is consolidating and coming off in a gradual manner. I mean, there is no like, waterfall event happening like this, which is a good sign for small caps. Uh, Bank Nifty also went this morning, opened at the previous resistance, but came off it. Nothing lost, 0.03% for the day. So now Bank Nifty has a chance to really break out from here in the coming sessions. Uh, Advanced decline is almost flat. 21 declines to 28 advances, or 217 declines to 278 advances. So reasonably flat from that point of view. FI figures largely positive for 25th November, uh, given that MSCI flows are included in this figure. Now, a lot of folks may say that this figure is not real because this includes the MSCI rebalance. But actually speaking, I mean, that is also money coming into the country through FII. So why would you not, look at that? Of course, on a regular course basis, that may not be the trend that has changed. But nevertheless, 10,000 crores coming in is always 10,000 crores coming in. Today's heat map is a bit mixed. We had autos, cement, power, pharma, Adani stocks, some banking names give up, some gains in Reliance. Infosys did a good job today, uh, and you had some sporadic names, Asian Paints, BEL, etc., go up. In the Nifty Next 50 space, you had Lodha doing very well at plus 4%. You had Varun Beverages, Godrej, CP, Zomato, HAL, LTIM do well. Adani stocks and other energy stocks all hammered today. So energy as a sector also was down, and with the news that Adani Total Gas will not get more, or sorry, Adani Greens will not get more funding from its foreign investor, and people are waiting and watching what happens to this SEBI probe on why they did not disclose all these investigations. That has harmed the Adani market cap today as well. Sectoral trends, only IT stocks were leading the market at plus 1.1%. FMCG also at 0.8%, but other than that, there was no gain as such. You had autos, pharma, and energy losing the most for the session. IT stocks in particular have done well from a 12-month trailing gain of just, I think, 5 or 10%. 6 months back, they're now trailing at 37.5%, easily in the top best sectors for the last 12 months, or the top five at least. And in the last 3 months also, you can see that IT stocks have performed the best amongst all sectors. So IT stocks are doing reasonably well. You can see here some of the stocks that were in the green. The chart is definitely very, very bullish. And this is largely on the back of US markets. Significant part of business for IT stocks is coming from the US market, and US markets is, at least the narrative there right now, is that the new president coming in is going to, you know, embolden and bolster the local economy, and that should help with more business coming from the US. How it pans out in terms of tariffs, etc., or the visas for Indian techies, that will be known only later. Tata Tele Maharashtra is the biggest, or one of the big gainers for the day today, up 16.7%. This has been consolidating from 110 levels down to 64, 65, and now suddenly there is a huge move up on this stock. The stock had seen a move from 2 rupees to 240 rupees post COVID, and then in the last couple of years it has just consolidated here. So there, this it does look like that, this is not looking to go back down the way earlier it was being thought. There is consolidation here, and if it does break out this 110 mark, then I think a lot of play can happen on the upside as well. So let's look at this sector, which was the worst sector 6 months ago, and now it is the best sector. No points for guessing. This is the IT sector. And we are seeing a short-term sort of breakout happening here. This is the only sector out of all the, I think, 13 or 14 that we track, which is at an all-time high, while the market is still some time away from an all-time high. And this sort of is a long-term breakout that happened some time earlier. You had a great run from COVID till 22 January, and then you had, this entire range consolidation for 2.5 years, and now only now this year has it broken out. If we see the very, very long-term chart, then there was a beauty of a run in 97 to 2000, where the sector went up from, you can say, almost 80 times. Can you imagine a couple of years of time frame, and a sector goes up 80 times? It's actually unimaginable, and because it happened a long time ago, and those who have not witnessed that kind of a furious bull run in IT stocks cannot really imagine it. I mean, just think of, I remember Satyam stock, it went from 25 rupees to 7,000 non-stop. So there were many such stocks, and many stocks went into oblivion after that, never to be heard of again. Pentaforce, DSQ Software, Silverline. Many of you probably have never heard of these stocks. HFCL had gone to some 3,000 rupees, and then it collapsed to like 10 rupees post that. So all that kind of things happened. Wipro also was a huge gainer, but the point to note here was that after this run up, because it discounted the next, couple of decades in prices, we really did not have any major gain in IT stocks till almost 2 decades later. So if you bought here, on 1st January 2000, likely you did not make a gain for the next 17 years. That is the kind of, you know, advanced discounting the prices can do. And post that, 2017 onwards, you had a good run, marred by COVID in between. But then now is sort of the third reckoning that is starting for CNX IT from that point of view. If we see the ratio chart of IT sector to Nifty 50, this also has been simmering since 2000. So after this huge run up, IT stocks have kind of performed in line with Nifty. And now if this starts to go up as it has been since COVID, once again, it may start to outperform Nifty on the upper side. This is the momentum score chart from June 2024, and you can see IT was right there at the bottom, with the lower, almost the lowest average of the momentum ranking that we track. And at 14.4, it was sort of the worst sector out there. And come November 2024, IT has moved all the way up, and it has moved in all the rankings, 1 month, 3 months, 6 months, and improving in 9 and 12 months ranking. It has moved to the top of the rank on this table also. Energy, if you go back and see, energy was in the middle, and now energy has sunk to the bottom. FMCG is also at the bottom. FMCG was sort of in the middle there. uh, Public sector enterprise stocks, which were top three, have now become the bottom five. So this is how sectoral changes will continue to happen, and your portfolios should ideally, go along with those changes, and have the flavor of the season in your portfolio. So this is some of this IT stocks performance over the last 1 year, 3 years, 6 months, 3 months, and 1 month return. And you can see persistent system has really performed very well. 3 years return has been 206%. HCL Tech has done 72%. Coforge has done 64%. So some of these stocks have really performed quite well over the last 3 years. And now in the last 1 month and 3 months, some of them are coming back up very, very strongly, with Coforge and Persistent, LTI Mindtree, and Tech Mahindra, etc. Uh, so today's IT sector is back on the top. We need to look for opportunities here. We need to look for buying on dips here, until such point that the sector becomes uh, lower in the momentum ranks again. So if the sector loses momentum, then you should not be latching on to these stocks. You should not be looking for opportunities there. You should be looking at opportunities in the leading sectors at that point of time. So the sectoral sort of round robin will continue to happen. Don't get stuck in one sector, but stay with the strength till the strength is there. Devise your rules or follow any strategy to figure out how and when to exit. uh, the changing nature of the market is the only sort of constant that will happen in our approach towards the market. And markets can remain irrational. So if IT stocks become irrational over the next 6 months, that's okay. You follow the trend, follow the price, and continue with the investment till momentum gives up on them. And in case you will be sort of not following any rules or any strategy, then there is a chance that, as the sector rotates back, maybe 6 months later, maybe 12 months later, maybe 2 years later, you may get saddled for long periods of time with that sector, not knowing when to exit and how to rotate into the new sectors. So this is sort of the learnings from the sectoral rotation that we have. In case you do hold IT stocks, do mention in the comments what is your outlook towards IT. Maybe some of you may be from the IT sector, and you may have more knowledge about how things are panning in the IT sector. Do write your narrative and comments there. Others will be also educated by reading the same. Thank you so much for watching this, and do like and share these videos with your friends and family, and I'll see you in the next one. Bye.